Welcome back to my channel. You guys, this is Tristen Campanella. I am your local area expert in San Diego, and I'm here today with your national housing market report and your San Diego local housing report. Whether you're thinking about buying or selling or investing in real estate, the housing market can greatly impact your financial outcomes in the world. So it's very important for you to keep an eye on that, and that's why I make these videos, so that you can have the information you need to make the right decisions for yourself. So we're going to take a look first at the national housing market, and these numbers come from realtor.com. I always like to quote the experts, whether it's realtor.com, Redfin's chief economists, or National Association of Realtors. It's very important to be data driven when you're looking at the numbers. So nationally, we are seeing a slight retreat in interest rates. We hit over 4.1%. And now we're back below that, mostly due to the conflict in the Ukraine and what people are calling war rates right now. So we're also seeing more houses going pending because the rates went back down, and the buyers who were ready and looking for a house have become more aggressive to try to lock in those interest rates and find the right home. Our active inventory nationally continued shrinking, but the gap from a year ago did narrow further, pointing more towards a more promising spring season. Realtor.com had done a 2021 homeowner survey, and it really pointed to a lot of people are thinking about putting their homes on the market. And nationally, we have seen an increase in homes for sale, 2.1%. Homes that are freshly listed on the market rose from a year ago for the second consecutive week. Realtor.com does corroborate the gains from their data 2021 survey of last fall. At the same time, with continued inventory tightness, homes sold at a faster pace than they did the year before, staying on the market 13 days less than they did 1 year ago from this month. So that means that homes are selling at a faster pace because most likely buyers are really trying to lock in those lower rates as they can see them beginning to creep up throughout this next year. In turn, our median listing prices accelerated 14% higher than a year ago, a period which was marked already by a strong price appreciation. Rising mortgage rates mean that many home buyers are gonna get pushed out of this market because it's already an unaffordable market for many home buyers, and now they're gonna be contending with higher mortgage payments as well as affordability. This may cause the housing market to slow down as we have less buyers, which will in turn give us less demand for the homes that are currently on the market. Nationally, new listings, a measure of sellers putting homes up for sale, were up 2.1% from last year. We started the year with a significant shortage of new homes. These are brand new construction homes, which is compounding the already tight inventory that we're seeing right now. In this environment, new home listings are necessary ingredient for a healthy market and a key indicator of future home sales. While new listings started on kind of a slower foot than we were hoping for at the beginning of this year, they are now trending up a little bit higher than the previous year before. This is slightly in part due to just the demand and home builders getting on board with the fact that we need more homes to sell, and they could sell homes very quickly. The annual rate of decline has steadily improved over time, and it is turning positive for 2 consecutive weeks. So we are seeing that tick up and that trend in more new homes being built. We may be seeing a small breakthrough in housing supply, which will point to more homes for sale in the weeks ahead. Fingers crossed. We want to have a sustainable market for the health of everybody. Active inventory is down 22% from a year ago. While new listings offered more options, buyers motivated by rising interest rates kept an active transaction pace. And we will still see a sizable gap in the number of homes actively for sale relative to last year. On the plus side, the gap continued to shrink, pointing towards a more promising spring market for everyone. However, as rising mortgage rates cut into buyers' purchasing power, it's going to be very important to keep an eye on both inventory and sales trends to evaluate if rising inventory is the result of an increasing number of sellers or a decreasing number of home shoppers. That is something to definitely watch. Let's get local. Locally in our San Diego housing market, our inventory is staggeringly low compared to February of 2021 to now. In 2021, we had roughly 3,000 single-family homes on the market, and as of 2022, we only have 1,300. This is going to continue to greatly impact the pricing until homeowners decide to finally sell. According to Lawrence Yun, chief economist at the National Association of Realtors, much of the current housing supply is in the higher end market, meaning higher end for San Diego could even be 1.5 to 2 million and higher. That inventory is increasing, while homes priced at the lower end of the market are quickly disappearing. Think 700 and below. This is leaving many first-time home buyers behind. The shortage of homes is boosting demand even further, and with bidding wars common in many markets, it's no surprise that sales prices continue to soar. I will tell you from a boots on the ground, active realtor position, I have had 3 offers accepted in just the last few days. So there is a way to increase your odds of getting your offer accepted if you know what to write and are smart about what you're offering. Make sure to call me or reach out to learn more, and I'm happy to share those tips with you. Our closed sales decreased 11% for our detached homes here and 6% for attached homes. So that means that less detached homes are selling. Our pending sales decreased 15% for detached and 18% for attached, and our median sales price was up 13% to $957, close to that 1 million mark for detached homes, and 22% to $670. Days on the market decreased 22% for detached homes and 25%, so things are moving quickly. Again, the numbers for supply, very, very low, down another 57%. So we are seeing more attached homes go on the market because of affordability. So keep your eye on that. Overall, we are expecting more homes to go on the market than we did before, and hopefully that will start to increase affordability for people. If you couple that with the idea that people are going to not be buying as many homes because mortgage rates are going to go up, that may soften our housing market for the first time in years. I want to thank you guys so much for watching, and as always, if you have questions or comments or anything, I would love to hear. Thanks again.